So hey guys, welcome back to the channel. My name is Phil Dean, and in this video, I want to show you how I paid off a $100,000 mortgage in under 15 years. So when it comes to debt, there's actually two types of debt. There's good debt and there's bad debt. Bad debt is like credit cards or car loans, basically something that just decreases in value and does not really increase your net worth. However, generally speaking, good debt is used to build wealth, such as a business loan, home mortgage, or a college education, because these loans are designed to increase your net worth and actually increase in value. However, I want to tell you that with any personal debt or any loan that you have, you want to pay off the balance as fast as you can. So in this video, I'm going to go over specifically how I paid off my $100,000 mortgage in under 15 years. So one of the first things that you need to do that I tell people is when you get a loan is to actually go ahead and get a schedule of payments, which is referred to an amortization schedule. This is simply a schedule of monthly payments over the 15 or the 20 or the 30-year loan. And the reason that I do this and the reason I tell you to do this is because you will be able to tell exactly how much your monthly payment will be with principal and interest. So if you don't know where to get this amortization schedule, when you go to get your loan, just ask your lender or your bank to go ahead and provide it for you. Or you can go ahead and go on the internet and you can just search up amortization schedule. You can plug in your numbers and it'll actually calculate for you. Now, one thing you will notice with an amortization schedule, you will notice that 2/3 of the monthly payment is actually billed towards interest and 1/3 is actually billed towards principal. And I want to show you that the reason that this is done is lenders or banks want to make the money up front on you and make the profit on the loan, because they know that most people are not actually going to stay with them for the full 10, 20, or 30-year term. So the first tip that I want to give you on paying off your loan as fast as possible is to go ahead and make as many principal payments as you could. And you want to do this at the very beginning, because at the very beginning, you will see that the loan is actually front-loaded with interest. And you got to remember that interest will eat you up, and interest is money that is totally lost to you. So essentially, you want to go ahead and you want to pay down the balance of the loan as fast as possible. And what you can do is when you pay off your principal, maybe let's say from $100,000 down to $70,000, you can actually go ahead and set yourself up to do what we call a refinancing. Refinancing is essentially just going ahead and renegotiating a new loan. So let's assume that your payment on that $100,000 loan would have been like $536 a month. If you go in and refinance the loan at $70,000, your payment is going to be like $375 a month. And what the trick is here is you want to be able to continue to pay that $536 payment to the bank. But what's going to happen is you are actually going to go ahead and put $160 on principal without actually even doing anything extra. Now, this is what financial advisors are going to call kind of the snowball effect, because as you pay interest and you start paying extra payment, you are going to rapidly decrease that principal and you're going to pay off your loan way faster than what you actually realize. The second option that I did to reduce my $100,000 debt in 15 years is I actually relocated to a different area. If you live in a bustling city or you live in a bubbling suburb, prices are going to be relatively higher than out in the country, because there is a higher demand for properties in the cities, and there's probably going to be lower inventory. So what I like to do is I like to use a website called Zillow.com, and in this website you can actually plug in an area that you are looking at, and you can actually plug in your price range, and you can actually find a house in a different location. And if you find a house in a different location, you can go ahead and contact the realtor and just go and schedule a walkthrough and take a look at the property. So the whole idea in this scenario is that what you want to do is you want to maybe sell your house for a great price, the one that is in that bustling suburb. And what you want to do is you want to try and find that same size house in a country location that's in a less expensive area. So for me personally, that is what I did. I actually moved away from my bustling city and I moved about 10 miles out into the country, and I got the same size house. But when I did that, I saved myself $30,000 to $40,000. And in this particular move, I actually paid my loan off and became debt free. Relocation to another area is an awesome way to go ahead and reduce your mortgage and maybe get another house that is less expensive, but it's still a great value to you. Now, maybe you are saying that you don't have extra money to put on the principal of your loan every month, and that is fine. I understand that. One option that you can consider is that if you have any unexpected income, go ahead and put that on the mortgage principal. And this can be income from a bonus. It can be a monetary gift from a friend. It can be a sale of a vehicle or a sale of an item. And you got to remember that that money is not something that you are actually living on with your living expenses. So if you take that money and you go ahead and put it back into the principal of your loan, you're going to kind of be, reshaping and reshifting your mind to be able to go ahead and put money on that outstanding balance. Now, interestingly enough, if you listen to financial experts, they tell you that if you make one extra mortgage payment a year, you will be able to pay off your 30-year loan in around 26 years. So be creative. Find extra money that you're not using for living expenses and plop it on that principal, because you will be amazed at how fast you can pay off your mortgage. Another option that I used several times to keep my loan down to a minimum was to go ahead and purchase a solid built house that was a little outdated and needed a little TLC, maybe a little sweat equity, maybe some simple cosmetic upgrades like paint and flooring and fixtures, something that can be done yourself. Because when you go ahead and can do some of that work yourself and put your own sweat equity in, you will save thousands of dollars. And if you buy a house that's a little outdated, typically you will be able to get it at a lesser expensive price and be able to save you thousands of dollars in the process. So these are a lot of the little things that I have used to pay off my $100,000 mortgage in under 15 years and actually get debt free at around 40 years old. So let me know in the comments below what you have used to pay off your mortgage, or maybe what questions you have to go ahead and get debt free. And make sure you subscribe to my channel so you don't miss my weekly videos on finance, and we will go ahead and we will see you in the next video.